With me today is Joseph R. Morgan. Joe, good to see you.
Thank you, John.
Yeah. So, thank you for joining me today on Business Conversations. I appreciate your visiting with us.
Thank you for being here.
Joseph and I have known each other for many years. Excuse me, Joe. I never call you Joseph.
Just Joe.
Just Joe. So, Joe, to share with our audience a little bit about your background. I know that you worked with Rockwell. I know you were involved with the bank and the Chamber of Commerce and the mayor. You were the mayor.
Cocoa Beach.
Right. So give us a little background of your education and your history.
Well, I went to Ohio State University.
Mm.
I came to Cocoa Beach in 1960. I joined my brother Tom, who was working with North American Aviation back in 1955. Following that, all the rest of my family, all my other three brothers and sister moved to Cocoa Beach. And I've been here for almost 50 years now.
Wow, that's wonderful.
You know, when the pioneering days of Cocoa Beach.
This is
when
right.
the average age here was 29, we had a lot of hair, and our waist was about size 30.
That's some time in the past.
Oh yeah, a lot of good years.
That's right. So, what we do in our program is we talk about business, and I know that you were telling me before how you'd worked in marketing at the bank, and what was your position? You were a bank officer.
I was vice president of marketing, director of marketing for the First National Bank of Cape Canaveral,
Mm-hmm.
First Bankers, First Union, and Wachovia. I retired from Wachovia after 40 years.
Okay.
John, the bank I was with always bought the other bank, so
Yes.
I had a great time.
And then you were president of the Chamber of Commerce, the Cocoa Beach Area Chamber of Commerce, for a number of years. What?
Yes, I was president in 1965 and also president to 1985 when we had 2,000 members,
Right.
which
Right.
was a great experience.
And that's during the period of time when I was involved in the chamber in
Yes.
those years.
I remember your reputation was well known.
Yes. And then lastly, you've been mayor. You were mayor of Cocoa Beach, and when was that?
I was mayor 1993 to 1999. That was an exciting time in life. You know, we built the new post office, the new library. It's really an experience. Almost like getting your PhD when you're the mayor of a community, to protect the interest and represent the city of the residents of your community.
Mm-hmm. So you've had a unique opportunity to really work with small business and family business owners and people both from a banking perspective and from a leadership perspective in the chamber and then as the mayor of the city. And so that was an important reason why I thought it would be a wonderful thing for us to talk, to have a benefit of your experience, your years of experience in that.
Well, you know, not only when as the mayor, but I also had the opportunity to meet with other members, the leadership of all the many mayors throughout the United States, and to listen to what their needs are, would be whatever it might be as far as population growth, sanitation, parks, recreation, porno shops, or whatever it is, and small business. Small business has always been a part of my life because in the banking business, as large as Wachovia is the largest bank in this county. So you get to know people on an individual basis. The difference between one bank and the other, or the difference between one banker, is a personal banker, and you get to know the small business right down to the detail.
And that's an interesting thing. You know, you and I were just talking a little bit about the personal banker. And a lot of business people that I speak with, you know, they tell me that it's not like it used to be for them. And they used to be able to go in and they knew one of the bankers there and they would talk to the banker and tell them what their needs were, and the banker would try to help them out and figure it out. And in many cases now it's a whole different world, that the decisions aren't being made at that kind of a level. And they just feel, you know, some real separation and alienation there.
Well, it's right. Yeah, the banks are larger, depending on the loan, but you can still go in and get a small loan, auto loan, small business loan from your local banker. It's, at least I know, and by the way, I might tell you, that it's actually the women who run the banks. It's not the men. You might, now the president of the Wachovia Bank in Brevard County is a lady, a young lady, early 40, and she's a very responsible person. But women run the banks, and most people don't realize, but they always have.
Yes, yeah. So, you know, financing is a real critical factor in business and in small business, and that's always been a factor. And one of the things that I speak to my clients about, and the business people that I interview, is the importance of building cash reserves. Because if you're going to borrow money, the best time to borrow money is when you have cash, when you have resources, and you have equity, and you're in a good equity position, and to always have cash reserve, or to work, really diligently work to build cash reserve. And it's always a difficult decision for the entrepreneur, who's typically very opportunity minded, and he gets a little money set aside, or she gets a little money set aside, and she sees the next opportunity, and boom, that cash goes into it. So it takes some real years of discipline in many cases for business owners to be able to put some money aside on a regular routine basis to create a cash reserve, and have a line of credit, and have financing options and leasing options available, but that they really build some cash reserves. Is that your experience?
Yes, I would tell you that one of the first things you look at for a small business is, one, is do they have an attorney? Two, do they have an accountant? When they say, my brother-in-law, he fixes my books, or my attorney, I really don't have one, that's a bad signal. So always have a good accountant, a good attorney. That's a good start. You should always have a line of credit. You need that line of credit, even small. If it's just $1,000 for your inventory, to buy your equipment, the banks, your personal banker is always willing to work with you. Some I find, John, that the folks, they do not plan far enough in advance. They don't keep that cash reserve. One of the things that we always ask in the bank from their personal banker, what's their marketing program? What's their plan? They're going to open the new restaurant. They're going to open a dress shop. What are they going to do? How are they going to spend their money? And most of the time, most people say, marketing? You mean advertising? They don't know what marketing means. A lot of times the Chamber of Commerce are always there to help advise. There's the Small Business Administration, folks that are always there to help. But your personal banker is normally doggone good, and there's a lot of assets available in the community.
That's true. So, you know, that's one of the first hurdles, is for a business person to learn how to survive. And once a business has been able to, you know, just continue to be in business and to survive for a period of years, and they get over the initial hurdles of the ups and downs of the economy and the seasons, and they hire people, and they're able to gradually keep their head above water a little better and put a little money aside. And, you know, one of the things is, just as you're saying, is to start to write down those plans. All entrepreneurs have plans, but they're usually just verbal plans in their head. You ask them about their plans, or I ask them about their plans, and in, you know, 90 seconds to 2 minutes, 3 minutes, and they're done talking, and that's the extent of their plan. They haven't written it down. They haven't given it to other people to read, to review. They haven't then taken it back and gotten the comments from the other people and reflected upon what's been said and made rewrites edits and kept it up to date, because you know it's a moving target. Their plan is always a moving target, and it needs to be worked on and kept up to date. And by the very fact of writing it and putting it into sentences and paragraphs, and have development of the ideas, and have other people be able to read it and understand what they're talking about, it clarifies their own thinking. Is that what you found?
Yeah, ask advice. A lot of times sometimes the best advice is maybe your father, maybe your brother, maybe your friends. One thing that's hard to do sometimes is be in partnership with someone.
Oh yeah.
If you can do it on your own, do it on your own. But a lot of times, one of your biggest assets is your spouse, members of your family. They can be excellent. Sometimes they can be. Sometimes daddies are always helpful financially too. Members of the family and mamas. I know in my specific case, in my personal family, my brother had a business here in Cocoa Beach for 40 years. But over those years, he had a good banking relationship. He made good deposits. But at the same token, the family had a lot to do with it. Everybody came in and helped whatever it might have been. And I think that means a lot. If you can depend on your blood relatives, I'm not necessarily saying your sister-in-law or brother-in-law, but I'm just saying
your brother.
Yeah.
Your brother, your sister.
Your brothers are always there to help the best you can. And your bank can be your best friend. Work with them.
Yeah, and if you have it in writing, you can take your plan into your banker, and you can hand it to him. And he can either read it then, or he can read it later, but it's something he can read and look at and then ask you more questions about. And then based on his feedback and suggestions, you can then do a rewrite, take it to your accountant, take it to your attorney, and get different feedback, and it'll be more concrete, specific advice than if it's just a conversation. And if it's just a conversation, how do you capture it? You know, it's lost in the space of the time that it takes you to ask the questions. They tell you the answers, and how much do you remember?
That's correct. And you know, you don't always have to start big time. I know a fellow who does rug cleaning started out with one truck, he and his wife. Now they have 4 trucks. Now it's been 10 years and more. You have to grow. Don't always try to buy the biggest, the best, and so forth. You know, I've had the experience of seeing a dentist, brand new dentist, and he went out and bought all his equipment and leased it. So it didn't go well. He didn't have a plan. He did not have a plan.
Yeah, and you bring up a good point. Many people in business, they start out and they got to have a brand new truck or brand new equipment. Well, if you buy used equipment, if you reserve that cash and keep the cash,
Absolutely.
and then you can always upgrade your equipment. You can always get a better truck, a bigger truck, a new piece of equipment, but you got to have cash reserves. Reserves.
Well, let me just review. You need to have one. You need to have cash. You need to have a good attorney. You need to have, especially if you're leasing some property. You know, it's like if you have an earache or you have something wrong with your eye, you go to a professional. You go to a specialist. Go to an attorney, and be willing to pay an attorney. Same thing with an accountant. Make sure you have a good accountant. Make sure you have some reserve. One way I find is really good is an equity loan these days. An equity loan is really a nice instrument to use. It's where you can borrow against the balance of your...
the equity in your home.
Yes, the equity, thank you. And you can use that not only for business, but to buy your new car or whatever it might be. That can give you a little reserve. But don't start out small. Make sure that you have good family support. Make sure that you have cash reserve and have a good attitude. And be prepared to work many hours.
Yes, yes.
You know?
So basically this is what, you know, I use the term the owner's dilemma, or the small business dilemma. and that is to get past those initial years, that initial survival time, and in this period of time to be frugal and to build some reserves. Even if you see good opportunities, sometimes it's better to just keep that cash and have enough cash that you can go through the ups and the downs in the seasonal variations and the depression and the recessions, that you've got some assets and you're building your own. Both the business has its own reserve and you personally have reserves that you can loan the business should you need to. And then over a period of years, as you gradually improve the profitability of your business, you're building those reserves. And then one of the next steps is to then train your employees to be able to gradually operate the business whether you're there or not.
Well, we're talking about employees. I'm a firm believer, a very firm believer of having a team spirit. You can hire anybody, you know. They can have all kind of degrees, but you know, you really gotta make your employees your team,
Yes.
and you really gotta make them, even if you really gotta feel like make them part of your family. And if they're just working there, that's not the kind of person you want. You want to be able to leave your cash register open, and they know that they'll protect you. They've got to be a member. You've got to make them a team member. Take pride in the work that you do. Pride. Teamwork.
Right.
And if you don't have the team, or if you have someone that is a problem, it's best to get rid of them right then. Don't get rid of them at the beginning of the day. Get rid of them at the end of the day, because they can affect your bottom dollar.
That's for sure. There's a lot of employee theft, shrinkage. Of course there's theft from your customers, but there's also a great deal of theft from employees. And it's a perennial issue. It's not a question of will you have theft. It's more a question of when, and for how long will the theft go on before you notice it. And if team building is one way to reduce that risk, but there's people that I've worked with that they've had people that have been employees for years and have been stealing from them.
Or you mean eating all the food?
Well, eating all the food.
I've seen where they eat the food.
Yeah.
Oh yeah.
Yeah.
Oh
Yeah.
yes. Oh yeah. Well, I think this is a grand idea where an individual can take the initiative to start their own business, and it does not have to be a restaurant or has to be a real professional person. Anybody can, if it's house sitting, dog sitting, or painting. Some of my best friends are people that are painters. I saw a man the other day. He had paint all over him. I said, "You're an artist." He said, "No, I'm a house painter." I get all guys things like. But I still, because I can't paint very well. And if you look over here, you'll see that thing is painted or yellow up there.
Yeah.
Well, somebody told me paint it. Don't paint it silver. Paint it yellow, so it looks good. And a good painter told me that.
Yeah.
Enjoy what you do. Now, there's one thing I must tell you, John. You have to be able to enjoy what you do. Every day that I went to work at the bank, I just couldn't wait to get in the bank. I really enjoyed it. I really enjoyed it.
That's true.
Because I was around that money all the time. If somebody asked me to balance their checkbook, I say, "Mary." I know, boy, I tell you, shoot. But being in the banking business and helping and showing people, depending on what ages they were. There's a lot of people that are in their mature age that are still active in business, and they're always willing to counsel and help people.
That's true. So one of the things that that goes next in the sequence that I've seen is once you've got some cash reserves and you have a team in place, is to begin to identify who could carry your business forward when you're prepared to leave. That you know that you're only going to have a business for a certain period of years. You're not going to be in business forever, and to early in your career to identify who is it you're going to groom and who is it that you're going to turn the business over to or sell the business to.
Absolutely right. And it's my understanding, a lot of good planning in that direction, especially if there's partners involved.
Mm-hmm.
Or a family. I think a lot of times people take out insurance policies
Yes.
that would cover so forth and so forth, where a widow could buy out or a partner could buy out the widow or where it might be.
Yes, buy-sell agreement, you have a written
Yes.
buy-sell agreement, and you have it cross-insured, where one partner pays for the insurance on the other partner,
Yes.
and vice versa, so that if one partner dies, then the proceeds of that insurance policy, the surviving partner pays the spouse or the family to buy the interest of the partner. And they have you need to have a fixed formula in advance of how the value of the company is going to be determined, and keep that formula up to date, review it, because it's just really a sorry thing when owners or families begin to disagree. Well, it's worth this, or and then they start having fights around what.
I've had some personal experience. Recently, the death of my three brothers. The expense involved for probation.
Probating. Yeah.
Oh, very expensive.
Yeah.
But with sons and daughters, do they desire to take the business and so forth? And what happens a lot of times, the value of the business is so high that the young cannot afford
to buy it from
it's,
their parents.
If it's it's $400,000 or $4 million, how do they pay for that? Mm-hmm. So what really happens in many respects is they have to sell the business to someone else, and then the proceeds come back into the family and so forth. I understand just recently, I think somebody's trying to buy Budweiser.
Yes.
And which is
the European company.
Well, wow, you think about that. But my own personal experience is it's if you don't plan for your personal estate or your business, you're not doing yourself nor your family or your partner justice, because or your bank.
Well, and there's two typical emergencies. I mean, one emergency is an owner dies suddenly. Auto accident, an accident at work, or water skiing, whatever, but all of a sudden the owner dies. It's gone. And sometimes it can be, it's not the owner per se. It could be the owner's spouse. It can be a child of the owner. It can be somebody who the death has such a profound effect upon the person who is responsible that they just can't go forward. It just it renders them unable to continue because of the grief and what they go through. So that's one thing, and then there's other emergencies like that are instantaneous emergencies, but they're not death. It can be the owner breaks both legs, and he can't be at the business, or he can't speak. He's ill and he can't speak. If he can speak and he can be on the phone, even if he's not in the business, or can he work a computer? So there's all these gradations of involvement or lack of involvement, but that can occur in a single instant.
And then who has I should tell you this way, who has the authority sometimes
to carry it forward?
Well, I can tell you this, when one of my brothers was out of town, all my family was out of town, and the great big 50-gallon fish tank started leaking. Who they had to call? I had to fix the fish tank.
Yeah.
The great big fish. Well, who has the authority to do that?
Right.
It's just a minor thing.
Yeah. But it's a huge thing for the business.
But, the president, who has to make the decision to do something?
Right. And it's good if that's in writing, if it's planned out, because accidents can happen. And then a next level of emergency is where there's maybe a debilitating illness begins, whether it's Alzheimer's, or whether it's a stroke, or whether it's cancer, or Parkinson's.
Or your wife runs off,
Yeah, all sorts of things but in other words, it isn't instantaneous.
Yeah.
It's something that the owner and the owner's family sees something on the horizon, And over the next several months or a year or 2 years, they can tell dramatic changes are going to come about.
That's what we call planning.
That's right. So these are the two emergencies that need to be prepared for by every small
When
business.
should you prepare for that? When you're 30 years old? 40 years old? When
Well, venture capitalists prepare
When?
before they buy into a business.
That's right.
Before they buy in, they have their exit plan of how they'll come out.
What we're saying is, doesn't make a difference what your age is.
That's right.
You move, you plan. You know, I'm going to do it tomorrow. Don't do it tomorrow. Do it today.
Start it today. That's
Absolutely.
right. Yeah, and it's not like you're going to do it and it's going to be done. It's incremental. It's you start and you do a little. Would
you believe I'm working on 2010?
Yeah?
I really am. I'm working in 2010. I know some things I have to do.
Outstanding.
And I told a group of people yesterday, that don't plan because I have things planning in 2010 on some events that I said I have to.
Yeah.
And I said, don't be bringing all this in because I'm that far in advance.
Mm-hmm.
And
That's
20
wonderful.
years from now, I'll be doing the same thing.
There you go. So once these two emergency circumstances are covered, then a business owner has an opportunity to plan the transition at the date and the circumstances that they want to. They pick out the time and they pick out the circumstances. And then tax planning can be done because typically 50% of the money that an owner would receive is going to be lost in taxes in a family transfer situation. And about half the business owners that are surveyed say that they would like to transfer their business to a family member or to a key employee or a partner, but in actuality only about 1 in 3 do it.
Well, that's where that accountant, that's where that attorney comes in because it doesn't make a difference if you're starting out new. You need to have those two key people with you wherever you go because then you're pretty well safe. You're not going to get yourself in hot water with Uncle Sam. I've certainly seen some locks on doors because they did not pay their
payroll taxes.
Right. And it's really important that they know where they are. You don't have to be in detail with paperwork up to here, but you need to know the basics. You need to have at least your family with you. You need to have your accountant, your CPA, your attorney. You need to know have some cash reserve. You need all those little things. Even if you just open a snowball place, you need to know where you're going to start from.
So just to review our conversation today, A, it's good to have a cash reserve. Got to have a cash reserve. B, you want to build your employees and have a loyal team of people who can operate the business. C, you have to identify a prospective purchaser, whether it's a family member or a key employee. And if it's going to be a stranger, identify that it is a stranger. And then to begin to have, regardless of who it's going to be, though, the people who operate have to start being given some real leadership experience that they can not only operate the business, but be able to make the risk calculations and the difficult decisions like, what do you do when the water tank's leaking? And that these plans are in writing so that when they're off on vacation, water skiing, or taking care of another business in another location, that these things can be handled.
Save the fish.
Save the fish. So thank you so much. I appreciate you being our guest today, and thank you for joining us on Business Conversations. And we just want to urge you again, make some plans. Make some plans. Get some help. Communicate with your loved ones, and don't put off to tomorrow what you need today. Thank you.